Okay, we're going to try these problems with regards to debits and credits. Presented here are 5 economic events. For each one, indicate whether the event will increase, decrease, or have no effect on assets, liabilities, and shareholders' equity. To begin with, 1. Receive cash for services rendered. Well, it would have cash would go up, so it would be a plus on cash. Nothing, no effect. And E on liabilities, and a plus on shareholders' equity, because we rendered services and revenue would increase, and revenue increases shareholders' equity, so that's a plus over here. Purchase supplies on account. Well, we would have assets, so assets went up on that transaction, and because we purchased on account, our liabilities also went up, accounts payable, and there'd be no effect on shareholders' equity. All right, then we paid the employee's salary. Well, if we paid the employee's salary, we paid it with cash, so cash went down. There's no effect on the liabilities, so it's NE here. And expenses reduce shareholders' equity, so it's a negative there. We paid dividends. Well, cash went down. Again, no effect on liability, and dividends reduces shareholders' equity. And lastly, expenses paid in cash. Well, cash would go down, no effect on liabilities and shareholders' equity. All expenses decrease shareholders' equity. All right, now, the second question for each item below indicate whether a debit or a credit applies. Okay, so if we increase in accounts payable, well, that's a credit. Credits increase accounts payable on the right-hand side. Increase in accounts receivable, that's a debit. Okay, left-hand side on the accounts receivable. Increase in retained earnings goes up on the left side or credit side. Decreased in unearned service revenue. Now, remember, unearned service revenue is a liability account because I accepted money, but I haven't done anything for the customer yet. So therefore, I haven't earned it, and I have a liability to provide the services. Now, when I provide the service, I decrease unearned service revenue, and so that would be a debit. Debit decreases a liability. And I decrease interest payable. Again, debit. For each of the following accounts, indicate the effect of a debit or credit on the account and the normal balance. Increase a plus, decrease a minus. So, let's begin. Salaries and wages expense. Well, a debit will increase it. A credit, decrease it, but you never decrease expense. And it has a normal debit balance. Accounts receivable will go up with a debit. It will go down with a credit. And it too will have a debit balance. Service revenue. Well, revenue really will go up with a credit. It never really goes down, but it's a debit balance. And it would be a credit balance account. Dividends, the same thing. Dividends will go up with a debit and will have a normal debit balance. And retained earnings decreases on the left, increases on the right, and has a credit or right-hand balance. Okay, number 4. Select accounts from the ledger of Daniel Corporation appear below. In the first column, indicate the nature of each account using assets, liabilities, expense or revenue, or N for nothing, none of the above. And in the second column, indicate whether it's a debit or credit. Okay, the supplies is an asset account, and normal balance for asset account is a debit. Notes payable is a liability account, and the normal balance is a credit. Service revenue is a revenue account, and the normal balance is a credit. Dividends has none of the above, so we put N for dividends, and it normally has a debit balance. Accounts payable is a liability, credit balance. Wages and salaries expense, it would be an expense, and all expenses have debit balances. Never have a credit to an expense. Common stock. Well, common stock is an equity account, and that's none of the above, really. So then we say that, but it would have a credit balance account. Accounts receivable, again, asset. Assets are always debit balance accounts. Equipment is an asset, debit balance account. Notes receivable is an asset, debit balance account. Question number 5, analyze the transactions of a business organized as a corporation and describe below and indicate their effect on the balance sheet or basic accounting equation using a plus sign to indicate an increase and a minus sign to indicate a decrease. So I received cash for services rendered. Okay, remember that. Cash goes up, no effect on liability, equity goes up. Purchased office equipment on credit, cash goes up and liability goes up. Paid employees' salary. Well, I paid with cash, so cash went down, and an expense reduces shareholders' equity. Received cash from the customer in payment of account. Well, I got plus there. I received cash from a customer, but accounts receivable went down, so there's also a negative in the assets. I paid the telephone bill for the month. I paid with cash. Cash assets go down, and the expense decreases shareholders' equity. So the negative is over there. Paid for office equipment purchased in transaction 2. So in transaction 2, I purchased office equipment on credit. Remember up here, it was negative. Positive. Liabilities went up. Well, now we're going to reduce that. And so therefore, there's a negative in assets and a negative in liabilities. I purchased office supplies on credit. My supplies go up, and so do my liabilities. I paid dividends. Well, cash went down, and shareholders' equity went down because dividends reduces shareholders' equity. I obtained a loan from the bank. Well, cash goes up, but also liabilities. Bank loan goes up. And last, I billed customers for service rendered. Well, my accounts receivable will go up, so assets will go up, and my equity will go up because I earned revenue, even though I did not receive any money. So those are the transactions, how they affect the asset, liability, shareholders account. We analyze that. We're now going to move into journalizing these transactions.